Good day, all. Ira Epstein with your metals market update for this Monday, the 10th of June, 2019, at just after 4:30 p.m. Central Daylight Time. So the gold market got hit, but, it was all one thing. It's Mexico. The U.S. didn't put tariffs on it. The fear of that had driven gold up, so now the gold is slipping back. The question is, how important of a break is that? The dollar had a little bit of a rebound today, but all in all, currencies were pretty much a mixed bag. Where you do see something of importance came in were the bonds and the notes, because they put yield back in. It had been coming out all week as people were scared, and now we have the FOMC lockdown, if you will, as they get ready for their meeting. So you won't see any of the Fed members saying a word as the meeting starts kicking off, and then we get the Fed announcement. I don't think anybody's really in a big manner expecting the Fed to do anything in the June meeting, except the question will be how dovish will their stance be in the statement that they put out, and then the questioning of Chairman Powell in the news conference. So as we take a look at the weekly chart of closes, you can see how the market got up, and it's starting to back off a little bit. For the week, we're down $16.50. Today's only Monday. When we look at the poke up, any way you want to go about this, from the 1280 level to almost 1352 was one heck of a rally, so the market might just be ready for a normal setback. It lost what I call its trend today, that being it had in place a pattern of higher lows and higher highs. You do see that. You stepped out of that today when you broke through this low. So now you've got a lower and low, higher high pattern, which is a market in a state of pause. When I look at the key moving averages, they start in at 1310 on the 100-day, down to 1304.40 in the 18 days. So that's one of the potential levels of support. The resistance, the market ended up, as it turned out, it's gotten back under the Bollinger Band. There's no magic about that. But more important is it lost its trend, and momentum is attempting to turn down. I think you can see how the readings are here and what momentum is doing. Now, coming into today, if we go to Friday's action, both numbers were over 80. But they were not the day before. This is just a market that I think got overbought. It doesn't have to go back to these numbers, as when you lose an embedded reading, you never got the embedded reading. It's just a market that's overbought. Overbought markets can do one of two things. They can either fall back into support areas, or they can consolidate and work that number off. That's typically one of the two. In the GLD, the market, like the futures, slipped back down. Now this chart was, actually, I'm going to come back here and move it back. That's what I had to do. I wanted to show how many days up and over that upper Bollinger Band you had, and it was rather stark. I mean, a lot of them. So this is the first pullback in the market. Now, if we take a look at the Bollinger Band here, the slow stochastics, both numbers are over 80 today. They were both over 80 on Friday and Thursday. So unlike the futures market, they had embedded. If they lose that tomorrow, it puts into play the probability of price in the 18-day average making a run at each other. There's something else that's happened here. You had a bullish crossover. The 18-day average, as you can see, finally, and that's the one in red, got over the 100-day. And I doubt that it'll go away in just one day. So it's going to be an interesting day in this market. Support 122.70 level. As we come into GDX, what we're not getting, and I read another article by another analyst today, is you're not getting a dramatic bull move out of the miner stock, and you normally do when you get a strong gold market. I still contend this is a base action, and supports back between the 100-day average and the 18. If you lose the embedded reading, both numbers are over 80 today. I'm going to have to do this one more time. Don't know why. Both numbers today over 80. Both were over 80 on Friday, and both were over 80 on Thursday. So you have the embedded reading. If you lose the embedded reading, my theory, nobody else's, I came up with this, that leads back to price going to the closest of the key moving averages, a high probability. By the way, high probabilities still doesn't mean it's a guarantee. It's just a high probability that I've seen over the years. So I would be looking at the 2172 area for the first support. The gold-silver ratio. This has been a good indicator as the difference just stays over that 18-day moving average of closes, and it's kept you out of trouble in saying, as so many people say, well, silver can't keep losing that much to gold. Oh, really? You're at a new high move on that, and if you look at silver, you see that it faltered at the upper Bollinger Band, broke through the low here, overbought. I wouldn't be surprised if the market tries to make a stab at that 18-day average of closes. It's only 4 cents away. It's not like it's distance, but you're not trending. You're sort of drifting sideways here with breakouts. Now, copper. Notice how you're pointing up in momentum. Here's something else that happened in copper. You had an outside day down in copper. My rule that I teach in my charting course is when you take out the high of an outside day down, it springs what I call a bear trap because it's an outside day down. That often, not the word that it has to, often leads to price in the 18-day average making a run at each other as, number one, the market tries to work off the oversold condition, and that pattern works itself off. In the platinum market, you've got a pattern of lower highs. Now, if you look at today's low of 796.80, it took out the previous low. So you're in a downtrend until you take out 811.90. If the market gets traction to the downside, maybe prices get to the lower Bollinger Band. At the same time, today's action was enough to take the market out of being oversold. But if you get much of a break, it probably becomes oversold right away. In the palladium market, you know, I've been saying that the big rally that we had from last year seems to have found itself again consolidating in this general area. Now, it'll be interesting, can we get a breakout out of this trading range, or is this a false move the way we had one right here? At this point, the market's in an uptrend. It has hit 2 upside targets. It is overbought. I think the pros are taking some money off the table. I thought that on Friday, too, when you hit the upper Bollinger Band, and you added another $30 to it. So this market's got some legs. In the dollar index, on the chart action, at least to me, it looks like between the 100-day average in green and the lower Bollinger Band, there's some support in that market. The trend is down. The market had a rally today, but sort of like stock indices, other than, it depends what you look at. If you looked at the S&P and the Dow, they both closed under where they opened last night. Yet the Russell and the NASDAQ took off. Well, the dollar index, if you look at how it did, it opened at 96.58. It closed higher than that, though. So this could be where the market's found some support and wants to get a little bit of a bounce. That's all I'm saying. It is very oversold. I don't see the shorts adding to this just yet. But remember, it's Fed week, so you got to pay attention. We're going to write about this and a lot more for you. If you haven't read our information on the financial markets, let's call it that, it's the metals and everything else, well, then you might want to take a look at it because we write for both the options trader and the futures market trader. So if you're somebody that likes to see the whole picture of the financials, give it a try. It's free. We put you on a free trial for a short period of time. How you get it is you either can call us at 866-973-2077, or you can go to our website, www.iraepstein.com. Our front page, as soon as you get there, it's a carousel of free offers. Just click on the carousel. Forms will come up. You can fill out whatever you want, and we start emailing it to you. With that, I'm Ira Epstein. You have a great day, and I'll talk to you tomorrow.